We'll be taking your comments in the comment section below. And if you're joining us on YouTube, you can also use the comment section on YouTube. We'll be having a Q&A session later within this time frame. And Angel PLC. She comes to this panel with over 20 years of experience driving growth, investors relations, and digital transformation. Bukola is a chartered stockbroker and a chartered secretary. She's passionate about leveraging technology to enhance market efficiency. Hi, Bukola. Welcome to this session today.
Thank you. It's a pleasure being on this panel.
Yeah, you're welcome. Okay, our second speaker is Abidin Alade, the head trader here at United Capital Securities with almost 2 decades of experience in equity proprietary trades and portfolio management, and he has a consistent track record of beating the market. Abidin, it's a pleasure having you on this panel.
Thank you very much, Iman. I'm very happy to be one of the panelists today.
Thank you very much, Abidin. Now that introductions are done, let us dive into the matters today. We know that we are currently in the earnings season, and it's a crucial time for all investors looking to build sustainable wealth through the capital market. Abidin, can you quickly just give us a breakdown of what this means and why it matters to our investors?
Thank you very much, Emmanuel, for that wonderful question. I think the way to unpack this is to look at the word dividend, being a crucial part of today's topic. What does it mean? When do companies pay dividend? What influence companies' dividend decisions? For the people on this call to truly appreciate the importance of dividend when it comes to investment on the floor of the exchange. In the simple layman's term, dividend is what you call profit sharing in some other type of investment. So what do I mean by this? Quoted companies periodically are statutorily required to file their financials. They do it on a quarterly basis, right? But there's one they do at the end of every calendar year, which is their audited account. And in most cases, it comes with them declaring some portion from the profit hand at the end of the year as dividend payments to their shareholders. This is usually distributed on a pro rata basis, which means if a company declares, say, a payment of ₦1 to its shareholders, you get ₦1 based on whatever holding you're holding, you own in that particular company. So if I have 1,000 units of that company, I'm getting ₦1 multiplied by 1,000 units, subtract less withholding tax. Ditto for someone that has 10 million, he or she will be getting 10 million units multiplied by that ₦1, to calculate what he or she will be getting at the end of the day. So what am I saying in essence? This dividend usually comes in cash, cash form, and in some cases, we have scrip dividend as well. Scrip dividend is just basically the cash converted into shares and given to shareholders for free. And at times, you also have a combination of both. In recent past, we've seen the likes of African and our own United Capital declare both cash dividend and scrip dividend, which you call bonus, for their shareholders. So what determines this on the part of the company profitability? You can't give what you don't have. When companies make profits, is a portion of this profits that they declare. So why is the earnings season important for this? We call this period earnings season because it's a period in the market when you see a lot of companies, quoted companies, come to the market with their financials, right, with their earnings report. And because of this, so many earnings in the market, this period of the year is usually called earnings season. Why is this important? Profitability determines how well you can pay dividend, right? Profitability determines how well you are run and how well you can pay a dividend, in connection also with the company's policy around dividend payment. Another point I think that is important for us to also note here is there are some sectors in the market that have consistently demonstrated their ability, to grow their dividend, to pay consistent dividend. And I'm sure we'll get into this as the webinar goes on. Thank you very much, Emmanuel.
Thank you very much, Abidin. That was pretty straightforward. Bukola, quick one, please. We know that many investors focus on capital appreciation most of the time in the capital market, but dividends, like we used to say, are a steady way to actually get a steady source of income in a passive way. So passive income. Can you explain how dividend works for our audience to actually get information about that?
Okay, thank you, Abidin. And flowing from where Abidin stopped, he said dividend is like profit sharing, right? So you have invested in a company for a long time. People look at different ways of optimizing or maximizing their investment. So there's cash flow. Cash flow is the dividend, and there's capital appreciation. Capital appreciation is, let's say, for example, you buy a share for 10 naira, and then over time it becomes 12 naira. So you have an appreciation of about 2 naira, right? However, if that company is a company with growth fundamentals and they have done well, maybe within the financial year, right? And after declaring their profits, they now declare 1 naira for half year, another 1 naira 50 kobo or 2 naira for end of year. That's 3 naira. So consistently earning these dividends gives you passive income of increased cash flow, as against just selling your shares when you had a price appreciation of 2 naira. So what it has done, what your investment has churned out for you is price appreciation of 2 naira and dividend, consistent passive cash flow of additional 2 naira or 3 naira. And then once you have that investment, there, and you don't sell, or you're not in a hurry to get the price appreciation, then you keep increasing your cash flow over time. And I always advise people to invest for long term. Our Nigerian market, for example, is a market where you can have long-term investment, have cash flow, increase in cash flow. I can give an example of all the banks. Sometime last year, a UBA, for example, was about 11 naira, right? Today, it has consistently increased over time. It went to 20 naira, went back, went to 30 naira, went back, and today is heading to 40 naira. And over time, this year, they have declared 5 naira. Last year, I think they declared 3 naira or more than that. So just imagine you having all this cash flow coming up consistently. You close your eyes over the dividend, over the investment, you have appreciation anyways because it keeps increasing. GTB is now 60 naira. And so last year, GTB was about 20-something naira. I mean, I can mention a lot of companies. I'm mentioning banks now, and there are a lot of companies like that. MTN, about 2 or 3 months ago was 170. Today is about 230 something. And then their dividends are consistent like that. So enjoying your cash flow in terms of dividend and enjoying capital appreciation in terms of keeping it for long term, I think is an ideal strategy for investment. I'll stop there for now.
Thank you very much. So how often do they pay dividends? Just some of the things I know our audience will want to know. How often do they pay dividends?
Okay, Emmanuel, I don't know if that question is for me.
Yes, please. So I just want to, like, how often do companies pay dividends? Are there prerequisites for qualification for dividends? Things like that.
Okay, so
we know okay.
So companies differ, right? A number of companies today listed on the NGX pay dividend annually. You have some who pay dividends biannually, and then you have some who even pay dividends quarterly, and I'll give examples. So you have maybe companies like the food industry, they pay annually. You have banks, a lot of banks pay biannually, they pay half year, it's called interim dividend, and they pay final. UBA pays biannually, Zenith pays biannually. And then you have some oil firms that pay quarterly. I know Friesland at the time was also paying quarterly. A Seplat pays quarterly. Airtel, I'm not sure, but they also pay, make several payments. So they pay, it depends on the company, depends on the company's dividend policy, and it also depends on the company's profitability. And then to qualify for a dividend, there are some very important dates to get yourself acquainted with. You have dividend declaration date, that's the date that they have said that dividend will be paid. You have qualification date. So for every announcement for dividend payment, right, there must be a qualification date. And that qualification date says that people who own shares as at that day will be eligible to have their dividends. However, once that qualification date is over, it now becomes ex-div. Anybody who buys shares after the closure of that date does not qualify for the dividend. And then there's also the closure of the register. At that point, you are not allowed to buy shares because people who already are on the register of members are then prepared and pegged as eligible to receive dividends. Thank you.
All right, thank you very, very much. Very, very insightful. Like I said, please take your notes, our audience. If you have questions, please drop them down, put them in the comment section. If you're on YouTube, also use the comment section on YouTube so that our panelists can answer all your questions during the Q&A session. Quick one, Abidin. So we would like to know, when is the best time to actually buy or hold stocks for dividends? And what is a better way to actually position your portfolio for dividends?
Thank you very much, Emmanuel. Just to lay on what Bukola just said now, with regard when do you buy to enjoy dividend payment, definitely it has to be before the qualification date, right? And because, like she rightly said, companies do pay dividend, some pay biannually, some pay quarterly, some pay yearly. I think in our market at the moment, it's only Seplat that pays quarterly. So if you want to buy, enjoy Seplat's dividend, you can target a quarterly purchases. You get those dividend provided you are buying before the qualification date. For the banks, like she also mentioned, they pay twice, the interim and the final dividend. Interim payment usually comes around July, August. So if you want to enjoy banking interim dividend for the banking stock, for instance, you position yourself before the qualification date for the interim dividend. For the final dividend, which usually come around this annual period. So if you want to position for dividend in some banks, what do? You buy before the qualification. Like she mentioned, at the moment, UBA just declared a 3 Naira dividend last week. I think Zenith also declared theirs too. The qualification date for both dividend will come next month. So if you want to partake or enjoy this dividend, then you have to buy into these companies before or on the qualification date. But I think there are also two factors that Abuke rightly mentioned that I want to shed more light on with regards what our listeners should watch out for before deciding on how to position themselves for dividend during the earnings season. A key factor that one needs to consider is the financials of these companies, right? Because financials impact how shareholders view a company. It also impacts how market values a company. It impacts how much a company can pay, right? So at the end of the year, whatever you've declared in terms of PAT will be divided by the outstanding share in issue of this company to decide what their EPS is. You hardly see a company that can pay above their EPS. In fact, you even hardly see a company that pays 100% of their EPS. So dividend declaration is usually a function of the EPS of the company. So it's very, very important that you buy into a healthy company that has positive financials. and thus having positive EPS, because it's from this PAT that companies declare dividend. It's also important to take note of the historical payouts. What the payout ratio of a company is. Traditionally, we have companies who pays like upward of 40–50% of the IPS to their shareholders as dividend. While we have some companies in the market as well that are paying way lower than that, because they have the habit of applying back majority of what they have into the operation of the company to grow the company bigger, especially at an early stage of a company, right? Where we have some companies that they've really grown to the point where they can't afford to pay 45–50%, even upward of that, out to their shareholders as dividend, and yet they keep growing. So, in summary, the financials matters. It impacts how a company is valued. In positive financials would bring about a positive valuation for the company and also consistency of paying dividend. While a negative financials would definitely bring about a negative valuation for a company and might even impair their ability to pay dividend, because such company might have to dip into reserve to be able to pay, even if they want to still meet that obligation. Secondly, how you position yourself to really maximize the earnings season. Diversification, very important. That you buy into, apart from choosing carefully the companies you buy into, you also buy from several sectors. What that means is, generally, diversification helps you, like reduce risk, generally. So this idea of you not putting all your egg in one basket, that is what diversification, that's what you're trying to do with diversification. So investing in multiple sectors, guarantees you that no matter how poorly, maybe due to a policy, having several sectors, and picking good companies from each sector guarantees you that you still get dividends. Take for instance, they recently introduced floating of exchange rates has really affected the telecom sectors. The biggest in the country at the moment has had a quarter of, I think, 5 consecutive quarters of bringing negative numbers to the market, and that has impacted the ability to pay dividend, right? So now take for instance that a shareholder only has that particular company, or has companies from only that sector in their portfolio, then during this earnings season, they won't have that cash flow. Right, but but for a shareholder that has, the telcos, you have a telco in your portfolio, you have the bank, you have the agro, you have oil and gas, you have consumer goods. There's no way, the earnings season come around and you don't get paid or get enough dividend from the earnings season. So diversification is key. Paying attention, to financial trend is also key when it comes to you maximizing your position or taking position for dividend, or maximizing your portfolio for dividend return. Thank you, Manu.
Yeah, wonderful. So there we go, everyone. Not putting your eggs in one basket is the key to maximizing your portfolio for dividend earning. Thank you very much, Abidin. But everything you said now brings me to a particular question, right? We know that some companies actually pay dividend consistently, while some pay high dividends like once in a while. So where should our investors focus on? Should they focus on prioritizing dividend yields or consistent dividend growth?
Yeah, good question. I think both are important and both are interrelated, right? So what will bring about dividend growth? Good financial performance, right? What do we mean by dividend yield? Dividend yield is simply the dividend you've declared divided by the current share price of that company. That is dividend yield, which you can now compare with like an interest on a principal, right? But the thing about the market is not always rational. If a company continues to perform well, there's that probability that the company might price the share price higher than what it should be. You hardly, get that equilibrium from the market. So low dividend yield at times is not equal to the company doing badly. It could also be the fact that over the years, the company has so much value, the market has so much value the company that no matter what they pay, the yield will be smaller. But the reason why I said both are important is consistently paying good dividend will lead to the other. And consistently paying good dividend also shows that a company is very, very healthy. Like I mentioned earlier on, a good financials would most likely lead to price appreciation because your shareholders, your existing shareholders will appreciate you and keep buying you and not wanting to lose their share in the company. But meanwhile, you now have new set of shareholders looking to buy into that company. And the thing about the market is, the higher the demand for the shares of the company, most likely that would lead to a higher pricing. And when the price keeps going up, then no matter what the company pays, the yield may either remain at the same level or even drop as the case might be. But that, like I mentioned, that won't be because the company is now suddenly becoming a bad company. The reverse could be the case. It could just be the fact that because they've started performing so well that the price has gone up, that no matter what they pay, the yield would not, increase as much. So in conclusion, I would say we should pay more emphasis on a company that consistently grows its dividend. The company doesn't have control over how market values it, but they have control over their own performance and how well they're able to grow their dividend over time. Thank you.
Thank you very much. So we focus on consistent growth in dividends. But Abidin, over the period where you were speaking, you made mention of dividend yields going up or down. I know our audience would want to understand what are dividend yields and how dividend yield is calculated. Can you quickly throw a light on it before we move to Bukola?
Okay, so dividend yield is just a dividend declared by a company. You divide that by the current price of that company. So if, say, for instance, a company that is currently trading at 30 naira declares a 3 naira dividend, and because another company B or another company C that is trading at, say, 40 naira also declares a dividend of 4 naira, in absolute term, it looks as if 4 naira is higher than 3 naira, right? But if you compare them looking at the dividend yield, just by saying your 3 naira divided by 30 naira, you get 10%. And if I do that for company B as well and say your 4 naira divided by 40 naira, I'll get 10% as well. So that tells me that the yield is similar. So it now boils down to which one can I buy the most, given their current price. If you ask me, in that scenario, I'll tell you, I'll buy the one that is 113 naira. Why? I'll be able to buy more. My yield will still be 10%. In absolute terms, I'll be getting higher dividend. That is where the issue of dividend yield becomes important. Is that so when you now have so many dividend payments and you are thinking, so I can now choose which one is best for me to go after, you can just look for the yield and start comparing yields. I'm sure the higher the yield, the better for the investor. I don't know if that answers the question, Emmanuel. Thank you.
Yeah, it does. It does very, very well. It does. Thank you very much, Abidin. Thank you very much, Abidin. Quick one, Bukola. Let's look at the issue of unclaimed dividend. The SEC, over the course of some periods, gave a report that unclaimed dividend currently exceeds 190 billion naira. This is a dilemma. I know our audience will want to know what steps can they take to actually prevent this from happening to them, the issue of unclaimed dividend, and how can they reclaim dividends that they've not claimed before?
Okay, Emmanuel, I think you've appropriately defined unclaimed dividend. It's actually a dilemma today in the Nigerian capital market. But let me also mention it's a global challenge, right? It's not restricted or limited to the African. Yes. Can you hear Bukola? So
Hello, Bukola. I can hear you.
Okay. I was saying that it's a global issue, right? It happens everywhere. But because our own figure, 190 billion, is quite huge, so it's really a dilemma and has become a monster for us here in Nigeria. And you would also notice that the capital market operators, the regulators, and all the stakeholders are all together combating this monster called unclaimed dividend. There are a few reasons why it keeps increasing. Number one, the companies keep declaring dividends, right? And for shareholders who, for one reason or the other, have not collected in the past, and I'll mention those reasons. People have severally relocated different addresses in the past when they bought those shares and changed their addresses. Today, they've not completed e-mandate forms. And so you have that monster keep increasing on that side. You have a lot of people who in the 2008 public offer market saga bought shares in several names, multiple names. A lot of those names today cannot receive dividends because we've had what you call an improved system with the BVN. Even though the regulator has come up to say, if you bought shares in those days in multiple accounts, come and we'll find a way to consolidate if you're able to prove that you bought those shares. A lot of about 65% to 70% are yet to come to clear that. And so that also forms another monster of unclaimed dividends, right? And so those, because BVN, you bought shares in 10, 20 names because you wanted to be allotted. Today, BVN can only be connected to one account. So if you're unable to prove that you bought all those shares, will remain unclaimed. And then continuous declaration of dividends will keep compounding the amount. Also, you have a lot of people who in those days bought very insignificant, number of shares, and for some reason felt the dividends were not insignificant and refused to do anything about it. Because of the increase, the number, the volume, all that keep. So I've given you like 3 different scenarios why those numbers will keep increasing. However, today, the capital market operators, the regulators championing with NIBs, have come up with a platform where you can just go check for your name, and then if you have unclaimed dividend, irrespective of the company or registrar, just completing your details on that platform, you are able to get all registrars to activate your unclaimed dividends and credit your accounts. That's 1. 2, registrars today are now techy and they've digitized their platform. So if you know any registrar that happens to be the registrar to one of the companies you manage, right, just go to their website. You would definitely find an automated way of claiming your dividends. So yes, the amount is quite huge. The regulators, the market operators, everybody are doing everything they can to combat it, but we need the investors themselves to also join us in this fight and see how we can reduce the monster unclaimed dividend.
Thank you very much, Bukola. Very, very apt. It's a global issue, it's a global problem. And we all know that most investors in this dilemma of unclaimed dividends, they are often saddled with the struggle of outdated records. I know African Prudential has a product called in-Ven. Can you simplify the process of tracking and reclaiming dividends? Can you speak to it?
Yes, thank you. Okay, so in-Ven is an application that Africa Prudential also decided, to work on to combat this monster called unclaimed dividend. So with in-Ven, you have the opportunity to see the shares that you hold. Now, all registrars are quite digitized and automated, so they have all that. So every registrar has that. However, for us at Africa Prudential, because we're looking at combating this monster, what we have done is to partner with one of the operators to give everybody a 360 degrees of seeing all their shares, unclaimed dividends in any company listed on the Nigerian Exchange Group. So once you log on or download the in-Ven application, it can be gotten on the Android and the iOS. You get to see all of your shares, and you get to find out if you have any form of unclaimed dividend. in-Ven also has found a way to help the investors who want to reinvest their dividends. So that's another module we just recently added. So is also going to help you position for this dividend and also help you reinvest your dividend. So you have earned dividend, right? And you don't want to spend it. You can reinvest it. in-Ven has that platform. So what we've just done is to come up with an application to also help investors claim their dividends and keep increasing their cash flow as well as their dividends, and as well as the value of their investments. Thank you.
Thank you very much. So if our listeners want to use in-Ven, how do they go about that?
Okay, so they go to their phones, their Android or iOS, and check for
IOS,
in-Ven.
yeah.
in-Ven is spelled as INVEARN, and then they download it. It will ask for their clearinghouse number because that's unique, particularly for the registrars, and then you pop up all. Is unique to your investment, irrespective of the number of stockbrokers you have. And then you pop up all your portfolio, stating the stockbroking firms that you have them. And that's where you get to see your full evaluation of your investment. Thank you.
Thank you very much. All right. Thank you very, very much. Oh, so Abidin, over time, we've seen the Nigerian capital markets give some impressive numbers, and we see that that has been consistent over time. Looking at this year particularly, what are some of the trends or sectors that you advise investors to look at for them to take advantage of the earnings season?
Thank you very much, Emmanuel. Yes, the Nigerian Stock Exchange has continually, bring forward companies with good numbers, right? But due to some policy changes, it looks as if some of the recent policies we've seen, high cost of doing business due to high inflationary pressure. We've had a floating of the FX, which has led to, I mentioned, the telcos, having to deal with that, given that they all have equipment that they bought on credit in dollars. Some have foreign loans from their subsidiary, from their partners, that all of a sudden just doubled. This same issue or this same pressure is also felt by the consumer goods space. You've had some of them even having to, delist from the floor of the exchange. But it hasn't been all that gloomy. We've had sectors that have really benefited from this. Chief among them is the banking sector, because their balance sheet has grown. You can imagine you carrying some dollar-denominated assets at 740. All of a sudden, now they're valued at over 1,500. Other financial institutions as they gain as well. They really benefited from this as well. The agro space, right? The agro space has also benefited because what this dollar floating and the current reality means is that a lot of manufacturers now have to source, they now have to source their raw materials locally. And that has, kind of helped with the competition with some of our agro firms, and that has shown in their numbers as well. So still going back to the issue of numbers, right? Because what investors really want to do is you want to screen for industry performance. Yes, based on all the policies we've seen in recent years, recent quarters, which sectors or what are the sectors that are really benefited from this, right? Once you nail down the sector, now you want to screen for companies in that sector. So we mentioned the banking industry, that the banking industry have done well, but that doesn't mean that all the companies in the banking industry has done well, right? Which is why the company screening also matters. So the next thing you want to now look at is dividend history and the consistency. We mentioned the fact that we have some companies that had historically, they've always pay out good dividend. They have high payout ratio. While you have some that they pay little because they always, either they're applying back money back into the business, or they're using current year profits to chase acquisition of other companies in order for them to grow and not grow organically, right? Payout, like I mentioned earlier on, is important. Then dividend and yield is important. Having considered all the sectors, if you ask me at the top of my head, I think the sectors to really look out for this year, I'll say the banking and other financial sector, where the likes of UCAP and African Prudential fall into. It's just unfortunate that before we have this webinar, these two companies, they've already marked them down for the last year dividend. But I'll tell you for free here, I think we should start looking at them to position for next year dividend. They are trading at a very reasonable price at the moment. And I'm sure whoever goes into this company at this point won't regret doing that. I mean, African Prudential and United Capital shares. For most of the banks, their dividend season is still on. Most of the ones that have declared dividend, the qualification date is still in April. So you can still plug into that as well. For the oil and gas, right, we expect them to still, turn out good numbers and pay dividend. Bukola mentioned Seplat when she was speaking the other time. Seplat this year declared, I think, 0.3 cents, and they now declared another special dividend of another 0.36 or 35, making it 0.7 something in all for for the last quarter of 2024. Don't forget, Seplat pays dividend quarterly. So what they are paying on last quarter is actually double. They're paying you their regular dividend, but they're paying another special dividend. Aradel has announced that their board have met. They decided to pay dividend. What they are paying is not yet clear because that financial hasn't been posted yet. I'm sure by the time they post the financials, the corporate action and dividend payment will come along with it. I mentioned the agro space. I think Okomu, Presco, even livestock wants to really look out for that. Okomu and Presco, they have historically, they have the track record of paying good dividend. And I think this year will be different as well, given the 9 months numbers that these two companies that they posted. Presco is the new one. Previous year, they posted negative figures due to the economic conditions, but it improved on that this year. And last year, up until Q4, in fact, they even posted their Q4 numbers. They've turned those negative around, and they furnished the market with an impressive number. What they are yet to do now is release their audited account, which I think would come with corporate action, dividend payments this time around. I know in the consumer space as well, a lot of them, they've overcome the initial challenge that came with the floating of FX. We've seen them recover from that because a lot of them, when that policy was announced, they had to bring negative numbers to the market. But I think based on the 9 months numbers that we've seen from the likes of UAC, Unilever, they've overcome that negative performance to now post positive figures. What can be estimated now is the amount of dividend that they're able to pay, given that they're just coming from a loss position. The board can just decide that given we're just coming from a loss position and the policy space is still a little bit unstable, they may want to reserve what they have just to watch to be sure that there's no shock around the corner policy-wise before they go back to their old ways of declaring yearly dividend. I think for me, like I mentioned, if you want me to rank them, I would say the banking industry first, followed by the agro space, then maybe by oil and gas, before I go to consumer space in terms of positioning sector-wise during this earning period. Thank you, Emmanuel.
Yeah, thank you very, very much. Very detailed, very insightful, as promised. Please, if you have your questions, drop them in the Q&A section. And if you are joining us on YouTube, drop them in the comment section. We'll soon be going into the Q&A so our panelists can actually answer all of your questions. And to quickly drop that in, I know not all our participants here are investors in the capital market. If you care to join, Millennium Capital also has their own app that you can actually download from your Play Store and actually participate on the capital market. It's called Invest Now. You should check it out. So quick one. Let us move to Bukola. So for someone looking to start earning dividends today, what are the steps that they can take and how can they kickstart their journey?
Okay, thank you, Emmanuel. For someone looking to start this journey, they say the best way to start a journey that you have not started is now, right? So if you want to start, first of all, identify the companies. Abidin has graciously not only identified the companies, he's even prioritized in terms of ranking, right? Identify the companies, ensure that they are growth structured companies, and then go open a stockbroking account. United Capital Securities here is giving us the opportunity by hosting this webinar. Just reach out to them. You'll see how to reach out to them on your screen shortly. Reach out to them, get the package to open the account. I must warn you also that it's automated, so you have to do a lot of that, electronically. Open an account within the shortest possible time and then fund your account. Position for a dividend right now. He has also said some banks have made some announcements. Their qualification dates will be there about 2 weeks from now. So it's better you start that journey now. Quickly buy the shares so that you can meet up with the qualification date. And that way you'll be positioned for dividend. And then you'll be positioned for increased cash growth, cash flow, and then price appreciation, your investment keeps compounding and keeps increasing. That's just the simple way. 3 steps: identify your companies, get your stockbroker's account package completed, and then put in funds and start buying and position for the dividends. Thank you.
Thank you very much, Bukola. There you go, guys. So identify the companies you're interested in, open a stockbroking firm with your preferred stockbroking firm, which is Venture Capital Securities, and then you position for dividends. So we quickly go into the Q&A section now. We have about 25 questions here on Zoom, and I'll be going through them one after the other. Then we'll move on to those questions we have on YouTube. So Anonymous is saying that I bought shares many years ago, because I think this is addressed to you, from various companies in small quantities, but fell in the capital markets. I have not been getting dividends. I have filled out forms and sent them to my bank many times. What should I do?
Okay, so you've completed the mandate form. Okay, so I had mentioned that there's a centralized way of now getting all your outstandings. It's a website, it's a link. And we can also share that link here. Just go there, go through the links, complete that form, and then all the registrars that you have your shares linked to will process your transaction. However, there are some things I should also warn you about. It would be nice to also visit one or place a call to one. Why? You might have some fundamental documentation issues that has prevented them. But I want to believe if the contact details you have provided on your documentation when you were buying shares, if they are still valid, they should have reached out to you to tell you why you are here to receive your dividend. But I want to say, go ahead, do that. Contact one, and let's find out if you have a fundamental documentation issue so that we can close that and then have all your outstanding dividends paid. And I also want to advise that you do it quickly so that you can have your unclaimed dividends settled.
All right. Thank you very much, Bukola. Abidin, this is directed to you. Rashid Oyetoro is asking that which is more profitable, the stock market or money market?
There's an interesting one. Both are profitable, and it's difficult to say this is the most profitable one because I don't know the kind of money that Rashid is playing with, right? For the stock market, your return has no limit. Your return has no expiry date, right? So if you join a company now, in as much as you've not sold, if the company continues to declare dividend in perpetuity, you keep getting the dividend from that particular company. The thing with the money market is that the return you get from the money market is a function of the interest yield environment. So the interest yield environment is currently on the high side. It won't always be on the high side due to high inflationary pressure. All the borrowers have had to, increase their rate as well, so that people get positive real return. So they've had to increase their interest rates to match or be around the current inflationary levels. So what you're currently getting on mutual fund now is looking much more higher than it used to be. But believe me, the government is currently fighting inflation like everybody does because inflation prevents peak development. So those inflation numbers will keep going down. Immediately they go down, then interest rates will follow suit. Then what you are getting on your mutual fund will now look very, 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 very minimal, right? Which will happen with your stock because you are banking on specific companies that they will keep growing. And then as much as they are growing, what they are giving you in dividend will also keep growing. And in fact, if there happen to be a company like a United Capital or African Potential that recently also give dividend, that means even your old that gave a script dividend, that means your holding in those companies also will keep growing. So your investment, your dividend payment grows, your holding grows, and because this company, if they keep demonstrating those kind of growth trajectory, there is high probability that their valuation also keeps growing. So if you ask me, I think if you want to grow your wealth over a long period of time, I think stock investment is better. But if you have big money to play over a short period of time, you can say I have 1 billion. Interest rates at the moment, or mutual fund rate at the moment is 20%. Just let me put it for 1 year, get my 20%, because you can calculate and plan with that immediately. But if you lock that for 10 years and you have a year when it's 20, during COVID period, interest fell even below 2%. So you get the point. Following those periods, we had interest around hovering, mutual fund interest hovering around 7-8%. So it's also a possibility, right? But what we've seen over time is that dividend payment for company, in as much as they keep growing, dividend payment keeps growing as well. So try and work this instrument, work them to match your investment objective at all times. Thank you.
Yeah, thank you very much. Thank you very much, Abidi. Jerry Chika is asking if the session is recorded. Yes, it is. How can you get it after the session? The recording will be made available to everyone after the session via emails. Okay, quick one. So Joy Ogochukwu is asking, how can I start investing in stocks? Abidi, this is directed to you for the first time. What is the process flow? Can United Capital kick off the process for me? And how do I know which company to invest in? Because the stock prices of big players is quite high. Abidi.
Okay, thank you very much, Joy. 2 things. So 3 things to quickly clear here. With regards to starting your journey, definitely at United Capital will do that for you. I'm sure at some point before the end of this webinar, we'll drop a link that you can click to open an account. Gone are those days when you need to go visit any stockbroker to get yourself set up. Now, from the comfort of your home, once you have internet, you can set yourself up to trade, whether trade on your own or give your stockbroker instruction to trade on your behalf. The second bit to quickly clarify, I know we've been saying you have to do sector analysis, you have to screen the companies you want to put your money in, go back to check dividend history and all that. And I'm sure some people on this call will be thinking, isn't this too complicated for me? Will I have time to do this given my 5 to 9 job or given the nature of my job? At United Capital, once you are part of our universe of clients, you don't need to do this. We have a very standardized research team that focuses on this on a daily basis. As information drops into the market, they analyze them, summarize them in a format that is easily that's easily understandable for our universe of clients, and they send us. Once you're on their mailing list, you get periodic reports. I think they send market review report on every Monday. That report would analyze what happened in the market the previous week. There's also a page for stock recommendation, and the basis for recommending those stocks will also be there in that particular report, where you'll see, in fact, they go as detailed as even suggesting the possible entry price for some of the stocks that they're recommending, possible exit price as well for some of the stocks they're recommending. You'll be seeing details as even the projected dividend that the company is likely to pay. The report is that detailed. And when the result eventually drops into the market as well, because when you pick a company's financial, it can be upward of 150 pages, 300 something pages. We understand that if you are not a professional in that field, it might be difficult for you to have the time to start breaking down these figures. And that is why we have a research unit. They will do that at the end of the day, send a 1-pager, just a 1-pager summary of what that report says that would help you take an informed decision. So for me, I think what you should just be particular about is how you start that journey. Once you do that by opening an account, would unload you through the process, and in no time, I'm sure you'll be good on your own to take most of your decisions in the market. Thank you.
Thank you very much, Abidin. Abidin, I don't think you'll be resting because we have another question here that is directed towards you. It's saying, like, it is expected that good financials and good dividend declaration should drive the market price of any stock upwards. However, in recent times, we've seen UBA and Zenibak declare good dividends with strong financials, with respect to their and whereby we now see the prices going downwards. Please, what is your view on this?
Thank you very much, Emmanuel. Yes, the question is quite apt. But the thing about fundamentals in the market is that over time, fundamental and market perception, they find a way to converge. At the moment, the market is a little bit soft. When we say soft, there's not a lot of money in the market at the moment. The reason being that I mentioned earlier on that the interest rate environment at the moment is high. There's an inverse relationship between the interest rate environment and equities markets. The fixed income space, your mutual fund, your bond, is seen as, they are seen as risk-free instruments. Risk-free instruments in the sense that they don't suffer what we call price volatility. If you place your money or you buy a bond, say for instance, you buy a bond, the coupon will be stated ab initio. You are buying a 20% bond. If you are holding to maturity, you know that you are getting 20%. If it's a savings bond, you are getting 20% quarterly. If it's your regular FGM bond, you are probably getting your dividend twice a year. And you know it's just 20% divided by 2, as the case may be, or 20% divided by 4. So you know what you are getting. And if you hold it to maturity, at the end of the 4th year or 5th year or 3rd year or 2nd year, depending on the tenor of that bond, you get the principal plus the last interest.
Yeah.
Equities market is like that. For equities market, due to other conditions, market conditions, there's price fluctuation. So the same UBA that some people bought 11 naira some few months back is now 13 naira. But in between those journeys, there was a time it went from 11 naira to 13, dropped to 12, moved back to 15, dropped to 14, does 18, 17. So you see that price fluctuation. That is why Buki mentioned earlier on, view capital market investment as long-term investment. If you view it as a long-term investment, it allows you to buy when prices are low. If you need money, you look to sell when prices are high. But so that if you're a long-term investor, you have a long-term perspective to all your equities market investment. You will witness the low and you will witness the high. So going back to your question about why these companies declared good numbers and it doesn't look as if their price is going up at the moment. It will eventually, because UBA paying 30 naira is huge, paying 3 naira dividend is huge. It's the highest they've declared since I've been in this market. If you compare, both the interim and the final, makes it 5 naira on a 30-something naira stock. That is way over 10% yield, right? And given that you are getting the money in less than 1 month, that money will not be prorated. If it were to be a fixed income instrument, even if they tell you it's 20% and you're only investing it for a month, you'll be getting 20% divided by 12 months. For dividend payment, it's not like that. Even if you buy UBA on the day of the qualification, you will still get the full 3 naira as if you've been a shareholder in that company for a full year. So these are things that we should know. So over time, the price would go up. It happens last year when they declared 1 naira 80 kobo final. People thought if you had that to their interim, that took them to around 2 naira 80 kobo, 2 naira 90 kobo. People, a lot of people were asking me, this thing should be trading 30 naira already. Where are we today? We are 37 naira. So eventually, what the market thinks should happen, or what investor thinks should happen, and what eventually happened, converge. So it takes time at times for these two things to meet each other, but eventually they will converge. Thank you.
Thank you very much. So, like you said rightfully, the market will reappraise itself. So the market will reappraise the stock to actually go meet where we are projecting or come down. Thank you very much. For those asking about in-Ven, so it is spelled in-Ven, in-Ven. So I think that is fine. We'll take questions from YouTube. Question from YouTube said, the same thing. He said, can you repeat the app's name again? Saying, so for trading, we have Invest Now, and for your unclaimed dividends, we have in-Ven. I hope that is fine. So going, let me see if we have, okay. Jimmy Ogbobino is 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 asking, like, I would like to have your opinion on an investment strategy that considers whether investing into dividend-rich stocks before the dividend payout or post-dividend payouts at either XD value or when prices moderates. But I think I didn't address this during the presentation. You would get answers when we send you the videos to the webinar. Apply to be right. Choose but never got unlimited. For those asking how much for United Capital shares, the prices are there on the stock market. At the moment, it's trading around 16 naira. But currently the market is ongoing. So prices can change or remain the same depending on what market activities look like. So you would get that at the end of the trades. Okay. Bukola, this is directed to you. You said where Rotimi Odukudu is asking where the 190 billion unclaimed dividend of shareholders currently sits.
Okay, that's a very dynamic question. Okay, so I'll start by saying 90% of the 190% of the 190 billion that are over 15 months currently sit with the companies, while 10% that are under 15 months, meaning recently declared dividends, are sitting with the registrar for the purpose of administrating the payment of outstanding dividends. I hope that is simple enough. So at every time a dividend is declared, right, we're open as registrars to pay out dividends on the payment day. In fact, I must tell you today, 90% and above go out. It's just that I gave a glimpse of the category that are yet to be mandated and why they will keep increasing like that. So with the registrars hold the funds for 15 months to ensure they pay out as much as possible to everybody that comes. Now, once it's 15 months, regulation says that you should move out 90% of whatever value is left to all the companies, that's the client companies themselves. In case of the banks, UBA, in case of the telcos, maybe an MTN or an Airtel, move back 90% to them. And then as we administer or pay out this 10%, once we exhaust it, we can now request for reimbursement. So it doesn't even sit with us, it sits back with the companies to enable the companies invest, and then they give reports to the regulators as well.
Okay, there you have your answer. So the money goes back to the companies. So Anonymous is asking, I mean, I guess this is directed towards you, and also would like a chip in from Bukola. He's saying, is it possible to earn dividend on an estate account if my father has passed? That's Anonymous.
Okay, yes, very possible. So, I mean, I didn't mention that a lot of our aged people now actually started investment in those days, particularly when the Nigerian capital market started. So a lot of them today have gone to be with their maker, right? So we have some of them that also fall under the unclaimed dividends. Now, if your father or someone you know belongs to that class, it's very, very simple. You might need to set up like an administrator. Most times, if you die without a will, then you go get letter of administrator at the probate office and then come with all those documentation. They will also give you a bank statement where you have clearly stated the investments that the deceased has, and all the companies, banks, is all encompassing. You go to the bank, you go to all the registries, you know that that's deceased shareholder held one investment or the other. And then for the registrars, what we'll do is to go through those documents, confirm that they are valid, and then convert that account into an estate account. And once the account has been converted into an estate account, all unclaimed dividends belonging to the deceased person will be credited into that account, and then all the administrators and the beneficiaries now have access to the funds. So it's just for you to kickstart the process. You can also do that with United Capital if you're sure United Capital or your stockbroker was the broker of the deceased. So it depends on wherever that deceased had his investment. So there are different points that you can start this process. If you have to come through a registrar, we'll look at our database, indicate on the bank statement where all the investments are. If he held a brokerage account with a United Capital, I'm using them as an example for a broker, right? You go there and then they help you manage all these things, and then you get your unclaimed dividends credited into that estate account. I hope that has clarified that. Thanks.
Yeah, that did a lot. And I know someone else was also asking about getting the dividend for the late mom. That also answers your question. We quickly go on to YouTube right now. Someone is asking, like, for shares of flour mills that recently delisted, is getting delays in payment from registrar and wants to know why.
Okay, so in that instance, I would advise you to reach out to the registrar directly. Most times they would have there will be a pool of funds for payouts. I think you should reach out to the registrar and get your funds. It's also very possible they had sent details of a form or something to get completed, for that purpose, and you didn't get it or you missed it. I would advise again that you reach out to that registrar and get it immediately.
All right, thank you. I believe this is directed to you. He's talking about the 2008 crash. I want to know what are the preventive measures already in place. Wants also to know what is the percentage of foreign investors in the Nigerian capital market at the moment.
Thank you very much, Emmanuel. Very good question. I think all we've been doing here, all we've been saying, all the registrars have been doing in terms of innovation, dividend payout on the regulator's part as well, ensuring that companies now post their financials on a quarterly basis. We no longer have certificates in the market. A lot of brokers now have online trading platform for transparency of trading. At the CSS end, there is now trade alert. So your broker trades for you and gives you a contract note that I've traded for you at this particular price. CSCS sends you an alert to confirm details of those transactions as well for you to verify from another source. A whole lot of stuff have been done in reaction to what we had in 2008. In 2008, and in 2007, I think there was a boom in the market. The regulators, I think they dropped the ball on some certain innovations in the market. Chief among them then was the margin loan, right? People were doing margin without really understanding the base of the margin. They don't understand margin call. There wasn't enough transparency around the market. But all we do now, you see houses hosting webinars to educate their universe of clients. You see corporate being fined, quoted company being fined if they don't get to report their figures on time. And apart from being fined, you see the exchange. Clearly, you would see missing regulatory report in front of your name. So it's more or less like buyers beware. Be aware that this person has not filed what he has to file. So maybe for now, you don't buy into this company until they do the needful. So there are lots of awareness out there, regulatory tightening, innovations to ensure that people keep track of their portfolio and understand what is happening in the market as and when due. Gone are those days when you don't get to see the price list of what transpired in the market until the next day. Now you see it in real time. Gone are those days where a company declares dividend, your dividend is sent to a post office, and the post office doesn't remit your dividends or bring your dividends to your apartment until they have to bring letters to that particular area. So it's contributed to this huge humongous unclaimed dividend we currently have in the market because people keep moving houses. Post office wasn't as efficient as the regulator thought it would be. Now, no more paper certificate in the market. If you are unusual that is coming to the market, you are statutorily required to credit everybody, which means nobody is holding any advantage. No shareholder is holding advantage over another shareholder. We get credited on the same day. So if I want to take advantage of price-sensitive matters, we are on equal footing. For dividend payments, the registrars must credit investors' account directly. So that has, taken out the issue of fraud around people impersonating or not shareholders impersonating another shareholder, to get their dividend behind and all that. So a lot, regulatory-wise, a lot has gone in. In terms of innovation, our market has also developed way more than what it used to be. So I think a lot have gone into that. And you see awareness campaign like this for people to know what is happening, understand how they go into the market. Those days, you see someone telling their friends, I bought into the market last week, I've gained 100%. Do say, no fundamentals around it, no thinking. You hardly see stockbroking firm equipped with research department to service their client. Gone are those days. Coming back to the issue of, to the question around the percentage of foreign investors to local investors in the market at the moment. I think since COVID, we've had the locals dominate our market. I think that the last data that was shared by the exchange, I think is currently around 70 to 30%. I can have that figure. The actual figure, I think, it's been 70-30 for a while now in terms of foreign participants to local participants. For them, I think the issue that most of the foreign PMs have had in recent past is just availability of dollars, right? They fear that when they come into the market, how easy is it for them to go out? Over the past months, federal government, the CBN governors, they've gone, they've traveled around the world to tell investors, we are open to investment. If you come, we are able to settle your dollar if you want to go out. So they've cleared all the backlog. But unfortunately, these moves by the regulators, by federal government and the monetary authorities coincide with when interest rates in foreign markets happens to also be on the high side, because the whole world is battling inflation. And when interest rate is high, you hardly see foreign PMs take the risks of taking fund into underdeveloped markets or developing markets like ours. But we think interest rate has begun to taper this year, not just in developing market, but in advanced market as well. And as it keeps going down, then we'll see foreign PMs go into other developing markets, looking for a return higher than what is currently obtainable in their market. So I won't be surprised if before the end of this year, if inflation level keeps going the way it's going, and interest rates in those markets keep trending downward, that we'll see more inflows of foreign investors in our market. Thank you very much, Emmanuel.
Thank you very much, Abidin. Before you go, there's a quick one here asking about stock splits. The person is saying, must the stock price be slashed or split whenever a company declares bonus issue? And there's another question I would like to just do too. Saying I bought a particular share for 20 naira, now it's 40 naira. How do I calculate my yield? Is it on 20 naira or on current market price at 40 naira?
Okay, thank you, Emmanuel. Just let me start from the second one around yield. Yield is calculated using the current market price, right? If the client wants to, or if the investor wants to calculate price appreciation, that is when you compare the initial price, the entry price, and current price to get, in this scenario, the appreciation will be around 20 naira. By the time you less charges and all that, maybe it comes down to 19 naira plus or thereabout. But for dividend yield, the calculation will be based on current price, not the historical price, right? Your second question is around splits. Yes, it is. So don't forget that when you do a split, right? When companies, when they register, right, they've registered with a particular amount, right? And the number of shares that company are used in registering is what we call outstanding share in issue. So the outstanding share in issue and the unit price per share would give you the capitalization of that company. The only way a company gets to increase the share in issue without altering, without doing a split or doing that adjustment, is if those shares were sold for money, right? If those shares were sold for money, that means you have more shares and more money, right? So it's balanced. But in a case where you are giving share out for free, so we are saying this company that, let's say a company has 50 shares priced at 1 naira to make 50 naira market capitalization. If that company decides tomorrow, I want to do a bonus of 1 for 1, don't forget that invariably the company share becomes 100. But because it's free, right, on the books of the company, because it's free, since the shares has gone to 100, there needs to be a split so that it shows that it's free, that new money has not come in. So the value of that shares has to be adjusted for the new share. So if initially, before the split was given, that share is trading 1 naira, then it has to be divided by 2. So it becomes 50 kobo. But the good thing about this is the market itself over time, if that company continues to perform in the same vein, you will notice that you will see an improvement on the new split price. So I won't be surprised if over time, once their earnings, the numbers catch it up, that share price reverses back to where it's coming from. So we've seen that in the case of United Capital, take for instance, let's use United Capital as an example, announced a bonus of 2 for 1. That took the share price to 40-something naira. But historically, the company has always traded around 22, 24 naira. When the share price was adjusted, it was adjusted to 10 naira, 50 something kobo, right? Now United Capital is back at 16 naira, 65 kobo. In fact, at one point, it was even trading around 24 naira. At that point, it had fully recovered to where it was before the 2 for 1 split. But now it's back at trading at 16 naira, 60 kobo in this current market dynamic. The same thing has happened to African Potential. And I think our listeners should try and take advantage of the current price dynamics due to the recent splits. Because I think in no time, you see these two companies trading back at their pre-split valuation. Thank you.
Thank you very, very much. Our time is fast spent. So we'll quickly do last questions. Last question, Bukola. Arinze is asking if there are regulatory policies that ensures that listed companies and registrars proactively address the rising volume of unclaimed dividends.
Okay, thank you. I had mentioned earlier that the regulator, the capital market operators, that's the registrars, the brokers, all the stakeholders, and NIPS have taken that monster and are tackling it. And that's why you have that link, central link, where anybody can go and check for your name. And where you find your name, they didn't limit or restrict the registrar to one. They included all registrars. So what they have also done is to ensure, or they sent a directive to all registrars to always update them, that's the regulator, with their outstanding lists for unclaimed dividends, and so that list can always be real life. So we're all collaborating, and this is under the regulator's directive. Notwithstanding, all the other registrars and companies themselves, if you check their websites, most of them have taken initiative to host a link that directs their shareholders to their list where you can claim or check if you have unclaimed dividends. So this is a collaborative effort, and it's top priority when it comes to the regulators and the capital market operators.
Thank you very much, Bukola. Abidin, last question. Someone is asking about Dunlop's shares. Okay, so that's a long time ago. He said Dunlop was sold shares publicly a while back, and soon after it went down. How can investors be guided or better informed into buying such shares?
Okay, thank you very much, Emmanuel. I think this would lead me to one of the points or one of the questions that I answered earlier, where one of our participants referenced the fact that quality shares or quality stocks tend to be more expensive right? I think it's important at this point that I just reiterate the fact that when considering investment, we should focus on quality over quantity, right? I've taken so many calls where people will tell me, yes, I have X amount to invest because it's not much. Just give me a few, how do we call them? Penny stocks that I can quickly buy with this money. No, you don't have to buy penny stocks, no matter how small that money is. You would rather have 1,000 naira worth of UBA, 1,000 naira worth of GTCO or Zenith, MTN, any good companies, any good names that you look around you that you think they are thriving. Because there's no magic in the market. Market is all about information. What we are just saying is when you look around you and you are seeing this information, ask yourself if you are making money from them. You go to your bank, you see long queues. You see operational efficiency. You see you are using a product and you know, anytime you go to the market, anytime you call your vendor, they tell you this product is very, very scarce. In fact, your vendor will tell you the one I got into my stock yesterday is finished. You have to wait for me to bring a new set. What that tells you is that that company is doing well. So if that company is listed on the floor of the exchange, don't just be expensing money, patronizing their product. Think about how you get from the profits they will make at the end of the year by buying into the company. That's what we're saying you should do. So when these offers, when they come around, if you can analyze it, call a professional, call your stockbroker. Check out your stockbroker's website to see what they've written about the offering, if it's one they think is viable for you to invest in before you invest in them. Because you are an ordinary shareholder, if anything happens to a company, the way it's settled is that you rank the lowest. In fact, you rank the last. Some other debt obligation, when the settlor takes over the company, some other debt obligations have to be settled before they get to ordinary shareholders. So in a case where there's nothing more to share, you see the ordinary shareholders having to carry the brunt of the fact that a company hasn't been managed well. So before you go into any company, if you can't analyze their financials, call your broker, reach out to that research department, check their website to be sure to see what they've written about this company. At United Capital, I think at this point, I need to give kudos to the research team. They do a lot on a daily basis, on a weekly basis. They cover foreign markets. They cover even the African markets. We make this available for our universe of shareholders for free. And we don't bore you with the volumes. They summarize as much as they can, just to make sure that whatever decision you are taking in the market is an informed decision. Thank you, Emmanuel.
Thank you very, 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 very much. Okay, so we're coming to an end of this. I want to take your final takes on this topic and how you advise our investors looking to actually position their portfolio for good dividends in this earnings season. Bukola, your final takes?
Okay, so my final take for this audience is let's ensure we watch out for companies with great fundamentals, companies with growth potentials, and then position ourselves. There's this interesting thing I like to say. In some years from now, when you're going to be well over age, how do you want to fund your lifestyle? A lot of us will say our children will take care of us. We're the ones taking care of their school fees and all that. Do you know that at that time, your children will also have responsibilities? So what will be funding your lifestyle? So right now is the time to position for dividends. Thank you.
Perfect. Make A where the sun shines. Abidin, your final take?
Okay, thank you very much, Emmanuel. Well said, Bukola. I think just to write on what Bukola just said, I have a couple. I think for me, given the period where we are now, the first one for me is for our listeners to stay informed. It's an earnings season. I'm sure some of us here, when United Capital announced their results or when African Prudential announced that 1-for-1, if we are aware, probably would have gone into the market before now, but it's not too late. Make that step today. Stay informed. Keep close with your broker. I think United Capital Securities are doing a very, very good work in terms of research reports. Stay tuned to be current with what is currently happening in the market. Secondly, like I mentioned during the last question, let's focus on quality as against quantity. The third one for me will be diversification. Very, very key. Diversification. No matter how well the banking industry is doing now, I would advise you, that will make me tell you, just put all your fund in the banking sector. No, because we don't know. A change of regulation might come tomorrow that forces them to pay less than what they are paying. And that could mean agri sector is the one now paying well. It could mean oil and gas sector is the one paying well. So for you to really maximize and position yourself for this year dividend and years to come, ensure you have a well-diversified portfolio. And lastly, I know dividend payment is cash flow. And for a lot of us, when we see cash flow, obligations are usually around the corner. But it's also a strategy for you to grow your portfolio. So I always advise my client, let's have that habit of reinvesting our portfolio, of reinvesting our dividend. Thank you.
Thank you very, very much, Abidin. Thank you very much, everyone. We're finally rounding up. Special thanks goes to our speakers, Bukola James Ho, Director Capital Markets, African Prudential PLC, Abdin Alade, Head Trader, United Capital Securities. Thank you for sharing your wealth of knowledge with us. At United Capital, we remain committed to empowering our investors with right knowledge and the tools to maximize their returns, especially during this dividend season. If you have any questions, kindly reach out to us at securities@unitedcapitalplcgroup.com. We also encourage you to take advantage of all the insights shared today and position your portfolio strategically. Should you have any other information, you can reach us on our social media platforms, on X at United Cap, on LinkedIn at United Capital PLC. Once again, I want to say thank you very much for being part of this conversation. I remain your humble host, Olodun Emmanuel. See you at your next webinar.